see here. Good evening, everybody. This is the strategy podcast for March 10th, 2020. Ken at Tortoise Capital. A lot of stuff to cover tonight. So I want to start with some feedback from trader JG2. So that's Joe came out in late fall, I want to say October, November 2019. Took the 2-day boot camp, personalized boot camp. So it was just two guys working on basic materials. He came back again in December to clarify and refine, and he's been trading ever since then. So he's 43 years old, 3 kids, 3 businesses, son of an Italian immigrant, and he's very focused on who he is and what he wants to achieve. And so we zeroed in on things that we thought would fit him, and then through practice he's refined those techniques, and now you can see his report. He's been hard at work manufacturing R's day in and day out. Only 4 months in from the first workshop, and he's consistently having 2 to 3 R days, and today's an 11 R day, so thanks to us in the chat room. He's now started adding additional scoops to the trade, so we like to start with that 1 scoop, get it well started, get to no lose, plus dinner for 2, and then if it doesn't stop, in other words, keeps going through checkpoints along the way that are starting to confirm the original hypothesis, then we can start adding positions as we have evidence now that maybe some of the higher time frames are coming on board and going to start supporting that move, and that allows us to scale in, and then we're all out when the trade cracks, if you will. And that's what I'm saying here. He was planning on coming out in March, but with the coronavirus and whatnot, told him to stay home, care for his family, don't travel, keep manufacturing R's, and I told him I want him to prepare for his brown belt test by the end of the month. And in the brown belt test, what I mean by that is he will make his first formal monthly check-in on a 1 slide and about a 5 or 10 minute summary, and he will present that to be recorded and then get coaching feedback. And he's going to have to do some analysis on his histogram and his trade distributions, and hit the highlights of his trading journal, demonstrate that he's got one, the insights that he takes out of the histogram and his lessons learned, and then applies that with intention to improve going forward, and he has a plan. He'll have a plan for that. And I've given him the names of a number of our black belts. I'm calling them black belts now. These black belts are folks that have been through the workshops, are trading on their own, applying the techniques in a personalized way, and have come to the research weekend and live trading week out here in Kansas and presented materials, usually a 20-minute prepared briefing that ends up going an hour on record in front of the team. So they've been peer reviewed by a couple people and me. Then they make their presentation. We have some great moments in the classroom. And then in my mind, that constitutes black belt status, because now you can frame a research question, conduct the research, present the findings, coordinate it with a couple other peer reviewers, and then present it in public with confidence, take the feedback, and continue to refine. So there's a number of folks that have been through that and found that to be very beneficial. So if the brown belt test is being able to go through the systems, make them your own, feel confident enough that you've got a month's worth of data to review, then that's brown belt. Then black belt would be the presentation at the research weekend. So Joe's going to be ready for that. And so I want to take a look at his charts real quick. And this is a link, well, just while we're here, the klbundle.com case studies. So that's Danny's website that supports the TC bundle, TC2000 bundle. And the case studies is where he and Dr. Eric Morrison, who's now starting to contribute some Forex case studies, are showing the bundle in action, showing how people are using it, and he knocked out a 9R win today, intraday. So Yeah, you don't have to buy the bundle. You just go there and register, and you can see the trades in action. I mean, it shows how to use the TC bundle, but even more importantly, it shows the ideas in action, and then you can apply the techniques to any trading platform you have. It does dual purpose, right? So this is Joe in Alcoa, and so it closed here, gapped up, sold off at when the RL10 peaks and then rolls through the dragon. He gets short on a hybrid frog. It doesn't close the gap, but comes down to the PSAR and then basically finds support. Then when the RLXD happens, regression line crossing the dragon, he cashes that one, goes long on the RLXD. I would support you if you said that was an owl. It is owlish, but it's the RLXD, and then he cashes it on the next RLXD when that RL10 crosses the dragon. Goes short. Notice that that's also like a Z3 pinch because it's that time of day. So he gets short one. He gets short a second one on the 200 when it crosses the Bollinger Band mean. Excuse me. Third position when it crosses the RL270. Well done. Now notice it comes into a really tight congestion period here, and you can see that the spring is starting to stall. It doesn't even get to the summer. And then when it collapses big. So those three positions are now really deep in the money. It comes down, he adds a fourth position when it tests and starts failing through the belly of the dragon en route to yesterday's close. He gets the fourth position, and you get a couple long wicks, you get a PSAR flip, dragon levels out, you get one little bump in the RL10, the second one, and then now you're deep into the spring. So he cashes all four of those short positions in Alcoa. Well done. Well done. Next one, Caterpillar, the trade of all trades. Now, he was busy doing other things, but you can see the Z3 pinch that was here. And when it breaks down and crosses over the 270 in this elbow of the dragon, if you will, the collapsing dragon and the PSAR flip. So you could be short here and work it all the way down. But he tries long here on an owl. It doesn't follow through, so he scratches or fractional loss and stop and reverse, and then covers, and then the PSAR flip, and then the owl entry, and cashes a gain here when summer goes into the fall. So beautiful trade in Caterpillar. Then let's see, is it this one? Yeah, I think it's this one. Here's U.S. Steel, beautifully done again. So we get a hybrid frog entry. It's starting to work. It breaks through the previous Z3. So he adds a second position, but then it doesn't follow through. Now, I wouldn't be offended if you cash the whole thing at the PSAR flip or at the first RLXD or at the owl. He cashes at the owl, stops in reverse. So this is a fractional win. By the time you count up with the first one won and the second one lost, it's probably a scratch. But now you're short with the owl as it crosses through the VWAP. Second position when it crosses the RL2 or the 200 simple. Third position when it rejects the PSAR and makes a collapsing dragon. Third position. Fourth one on a money management, and why not? And it gets and breaks through the yesterday's close, and then cashing all four short positions with an RLXD. So his net for the day was 11. Well done. How much more do you want to say? That's pretty darn good. That's why he's ready for that brown belt test. So let's. So here's some work. Kim working in the chat room. These are Joe's postings in the chat room for the people to comment. Now here's a series from Kim talking about UVXY, and we'll see later on the thumbs for VXX, and then the SDAO. And Kim, the link you used to get in here today is good for the next 30 days. I'm just doing them daily, except for Saturday nights for the next 30 days. So here was an update from Eric, who was talking about his view from Europe about the coronavirus and what's going on, and sort of the what it looks like from that side of the water. So pretty good stuff there from the Euro team. So I want to take a quick look at Kim's work here. Here's UVXY on, this is from the noon to the close, 5.5 hour, 4 trades. It looks to me, and now tell me if I'm wrong on this, Kim. This looks like the RLXD second leg up, or about a river breakout at 1. Oh, I'm sorry. You said it right here. Emerging Dragon, so I was right. Second position, a continuation. Third position looks like the Emerging Dragon, and then a cat, and then cash everything here for about, that looks like about 1.7, about 3.6. There were some other trades in here during the day, but I know you were busy. And then 4, this is like the looks like the PSAR flip and reversal, and that looks like a long position. Am I right on that? Buying here and selling there on the RLXD for another quick 2, and all well aligned with the 4 seasons. I like these because they are well into the summer and fall, and then cashing at the beginning of the fall. Really, fall has endured, so he doesn't stick around. And then I like this one because you get it as winter becomes spring, and then it starts to reject the 0 line. So as it goes into winter, that gets corrected. So that was just perfectly played. This is UVXY from the open till noon, and Kim mentions in the chat. This one is a little bit better. 24R. That's a little bit better. I'll just let you guys just enjoy and be amazed. Emerging Dragon. I would also call that kind of like a river breakout, so I don't mind that. Emerging Dragon. The continuation pocket for 1. A second continuation, another Emerging Dragon, and a continuation, just totaling up those moves. I like that you're scaling in, and then your exits are just well tuned, especially when you look at it compared to the 4 seasons of MACD. An Emerging Dragon that failed, and I like that you didn't stick around too long. And then re-entry on an Emerging Dragon for another, looks like 3, with a second position. Another couple continuations for 6 and 4. Nothing wrong with that. Here's the VXX trades. Those are going to look kind of like the same. It's only not quite as leveraged, with a 20-cent execution stop. So if you're using a 20-cent execution stop and like a 60-cent position sizing stop, then all of that 24R is really 8 position R, and you would have even less stress than you already have. But with those numbers right there, why not? Why not just keep doing what you're doing? I think you're really starting to internalize that. So that's the VXX. We saw that one in UVXY. It's really the same patterns. And then the SDOW, another 10R. So that's 40R intraday, grinding it out on broad indexes plus volatility. It feels to me like you're getting ready. So using a quarter of the position size, so that's good too. That's even better than a third in my view. So that 40R equates to 40 execution R equates to about 10 position Rs. And let's remember that if you can net 2 position Rs a week, that's 100R a year, and so that's 10 in a day. So just as a point of reference, I'm really impressed with that, Kim. I think you're really starting to hit your stride. So well done. Excel, you're messing with me here, dude. Let me get to, let's do just a couple other charts that were of interest. So as you guys know, I teach logistics and strategic planning in a doctoral program and to Army professionals. And I just want you to know that central to what I teach and have been working on for the last 40 years is this supply chain management. And I want you to notice that I've been a 40-year veteran of doing that stuff. And when you substitute trade management for supply chain management, you realize the symmetry of what we're doing in here. Customer focus, systems thinking, bimodal innovation, meaning that you're looking not only at your production but at the customer's process, so you're looking at all ends of the chain. Collaborating with others, maintaining flexibility, leveraging technology, using a global perspective about markets, managing risk first, last, and always, visibility over your entire process and all the elements of your dashboard, and then seeking to create value in everything you do. And I count that as the accountability and the measures of performance, that's sort of the histogram. So there's a real synergy in the way that we're approaching the manufacturing of R and distributing R, and then the work that I do in supply chain. In fact, I use these principles when I am advising folks on our strategic planners and Army doctrine, so just so you know. Here were my trades today, the series from EWZ. So I took the peak of the RL10 and where the price crossed the belly of the dragon here and made that my yellow zone, and then essentially got the let's see if we can get that to work, the collapsing dragon and the RLXD. Got a fractional win, stopped in reverse with the owl, cashed at the RLXD, short at the owl, second position on the collapsing dragon of the first wave down, so that's the second position. Crossing, I always forget to do this, so you can see, sorry. So owl short, this one is a collapsing dragon compared to the belly of the RL10 and the dragon, so that's the second position. Comes down, it gets as far as the previous Z3 excursion, finds support, so I cover the RLXD, took a break for a walk. Came back in time for a collapsing dragon once more. Covered with the RLXD a little slow. Could have been earlier. But that was the PSAR flip. I was just hanging out for a little bit more. Tried a second short when that resumed because you have a lower high. So if this was the previous high and this is the lower high, that's the third lower high in a row. So I'm eager to get short again. It doesn't work. It immediately starts back up, gives me the RLXD, so scratch that one and then stop and reverse. I treat that as an owl. Take the RLXD exit, pause. It finds support, so then I'm long on the RLXD, and then off we go. Next one is, so this is UDOW. So I'm showing the combination of what I did in UDOW and SDOW on the same chart, so that because I execute like going long on whichever one is going up, but I show them on this one chart so you get the sense of the narrative and flipping back and forth. So what I want you to notice on the red lines and green lines here. So this is a swing high in the dragon, a lower high, a lower high. And this was a swing low in the dragon, a lower low, a lower low. So, and then my yellow zone, this congestion zone here, I took from the top of the RL10 to the bottom of the RL10, and then just stretched that across and said that was the the galactic boundary today. So when we get the hybrid frog break out of it, that's what sort of triggered that first one. And then as long as I'm getting lower highs and lower lows, I'm really trying to get short. This one, I tried to get short, but it didn't make a lower low. It made a higher low, so I made that a green bar. So now when I take the, I would call that the pocket entry, when it takes out that previous high, now it's going to go on to make a higher high. So now I'm justified in being long. So this is the failure to fail further. Stop and reverse, go long, find support in the dragon, continues all the way up to the VWAP, and then starts rolling over and exit with the RLXD. Now, because I have a higher low and I just made a higher high, now I have a long side bias, so I don't get short in here. And then it finds support, and now you notice that it is a low, a higher low, another higher low, so I'm still justified in going long. So go long. It doesn't really pay off, and I take the RLXD. Now you notice that I've got this marked as a blue line. That's because it made a local high, but it was lower than this high. So I have a higher low, I have a higher low and a lower high. So that's almost like an inside day or a consolidation. So now I don't know which way to go, but it comes down and finds support and gives me another RLXD while making a higher low. So that just tells me, okay, get long. It gets through this little hump, gets through the VWAP, so I add the second position, and now the next thing is it's going to come up in here and test, and if it breaks out, this is where I would be adding a third position up in here. Okay? All right, so this is VXX. So I find the belly of the dragon and the hump of the dragon, and I draw my yellow zone across. That's about 60 cents. I get a Z3 pinch, and it just went from the shallow winter into the summer. So now I just buy that Z3 breakout. I'm long with the stop below, like about Z3. The yellow zone feels like about the proper execution stop. So I'm long. Second position. It doesn't fail further, holds support at the Bollinger Band mean by the third position, and add a big move up and a couple of sharp sell-offs, and then get the RLXD and then out. And now it just kind of mucks around, gets really, really narrow. This is when I'm trading some of those other things in the SDOW and the UDOW. This just didn't really grab me. So now at this point, this is the trade frame that I want you to see. So what I have is the VWAP has established. The RL270 is strong up. The RL90 was up, came back, and now is still stabilizing and starting to roll up. I draw a yellow zone from the hump of the dragon to the belly of the dragon. That's a very narrow box, but it's the same size box as down here. So that feels like the minimum mission essential box. And now if it immediately fails, I'm going to be short. If it gets through this yellow zone, I'll add 2 positions. But now I'm going to be long one and hope that it comes up here and tests the hump of the dragon. I wouldn't be surprised by that. So what I have here is a critical state. I have a declining volatility. I have a generally upward day with upward indications, finding support at the VWAP. So why not just buy it and pay the minimum price to be wrong, and then have the maximum chance for the single position to pay off? Then if it breaks above the hump of this, this is where I would add the second position. So that's typical trade architecture for me. So this one is DIA. This was later in the day. So this is, I'm showing the patterns in DIA for those of you trading the futures because the numbers are the same. But you can also imagine this being executed in UDOW and SDOW as appropriate intraday if you're using the leveraged ETFs. So I want you, these little blue, these 3 blue circles are when the RL10 was on one side of the VWAP and then crosses. This one didn't last very long, so there was a short opportunity in here. And why I didn't take it, I was doing other things, but I want you to notice the winter into the spring, so that's a first alert. So alert, and you'll notice that the RL270 flattens out and is getting ready to climb. So that's the first warning of a turning point. Then the spring survives into the summer and crosses into the summer. I call that the second warning. Now it went up into the summer, crossed back into the fall, and then didn't go into winter, but resumed. I took that as the green line go, and price was crossing the VWAP, so long. When it takes out the previous Z3, second position long. It holds support at Bollinger Band mean, third position long. Now I want you to notice that we had one leg up in the summer, fall. Second leg up in the summer with a new high, fall. Summer, but this time the high didn't get as high. And so when it rolled over into the fall, I took this as a warning. So I just took the RLXD, and I had 3 positions in anyway, so I didn't mind that. I was not agile enough to get right back in and go. I was kind of tired mentally from those 3 positions, and it's getting close to the end, and I can't trade very well in that last little period. The daily now looks like this. So we have our 10, 20, and 30-day lookbacks. We are still deep in the winter. That MACD signal line is at minus 21. That's enormous. So we have a short bias. This is from the swing high. This is a 10, 20, and 30% sell-off. This is the 30-day high and the 30-day low, the 10-day high, the 10-day low, the 1-day high, the 1-day low. This blue line was Monday's opening. And then today's range from high to low, there you notice it gapped up, sold off, closed very strongly. So the upside price indications where we can legitimately, like on a fast swing trade or even with end-of-day data, look at adding positions is the high of the day, the skin of the dragon, the RL10, the hump of the RL10, which it would act as resistance. So if it gets through there, that's a good sign. That's also equal to the spine of the dragon. Then the upper skin of the dragon, the PSAR flip, the Bollinger Band mean, the long-term fair value with the RL270, and also the RL90, which is the RL30 of the higher time frame. Then we have the 30-day high-ish and the hump of the dragon and the skin or the hump of the RL10. So lots to choose from in there. This short-term trading is indicated to the max. Next one up, let's call this one like this. So notice this is ranked by biggest win. So the UDOW was up 13%. SCO, that's the triple inverse oil, was down, looks like 21%. Here's the S&P at plus 5. So everything north of the S&P in here were things that had additional relative strength. So financials, Tesla, natural gas, Alcoa, tech, McDonald's, Apple, Home Depot, Devon's, Simon Property Group, U.S. Steel, Wind, Brazil, oil, and the UDOW. So these were all the things that had gotten slaughtered the most yesterday. So this is not the sign of a bottom is put in. This just means that the 7th worst day in the last 20 years has had some recovery, buying on, quality on sale, I guess. So it's not a bottom. It's just a normal volatility upside reaction against the massive sell-off from yesterday. Everything is basically in the daily winter, a handful of falls. The summers are all these defensive plays like the short oil, volatility, and gold. And so this is still getting the market call correct is what is key here. Okay. Have I done the speed run? I'm a little mentally tired here. Have I done the speed run? I don't think I did. I did one earlier, but that video is still recording, and so I'm just going to do it while it's live, so you don't have to wait for that thing. Okay, that's what I thought. I mean, I had done one earlier because I was going to try to record this and get it uploaded, but the file was so big it hasn't finished uploading at YouTube, and they've been very slow these last few days, so I want to go through it with you so you can hear it. The video I record basically has the same comments that I just made. I'm going to upload 2 versions, so you might, if you want to, you can listen to both if you just got to get more, I guess. Again, the only swing positions I have here are ones that are paid for by markets money already, and you'll see a couple of those in here. The Walmart one is especially beauty. Alcoa, I was intraday trading. Apple looks favorable to me. In tech land, I think that's fund managers buying it on sale. The Aussie dollar is muddling through, nothing to see there. Boeing, I am short one. It clawed it all back today, but I still think they're weak and long-term structurally damaged, so I'm staying with that short. I should actually draw the box on that, right? So let me do that now. This is, I'm going to take the skin of the dragon as the stop. So that's my short position there. Caterpillar, I'm just going to trade that intraday. I don't want to short them yet, although I think they and Alcoa are really positioned to be smashed hard by a general slowdown in the global markets. So That's one I could support being short, but I'd rather get that with, I think, XLB. I just like Caterpillar, the company, so I don't feel good shorting them. But if I did, it would look something like that. Okay, but I'm not going to short them. I just like the company too much, which is a dumb reason not to short them. CEF is that Canadian Physical Gold and Silver Trust, and I'm comparing that to WPM. It did not do as well as Wheaton, so I'm still thinking Wheaton is the better play for exposure, long and short, in the precious metals. Cliff had a little recovery. It's trying. It's still an intraday. Cut, I'm short that one. I still believe they're going to suffer, but they rebounded and closed pretty well today. So I'm going to take the skin of the dragon. I'm a little bit underwater on this one, but I decided to hold it for another day. Diamonds, I'm trading intraday. Devon Energy, God, I should have been so short this thing because it's energy company, and so the energy sector slowed down, and they have earnings issues as a company, so there's additional volatility. But I'm playing this one directly in the ETFs. But Devon Energy, longer term, is going to be a big time swing candidate for me. Emerging markets look pretty good. I'm ready to buy it at the blue line with a stop at the red line in the target of the PSAR flip and fair value. That's in better shape, you'll notice, than EFA, which is suffering more from the big companies that experience more losses during global slowdowns. Japan is trying hard, but I'd stay away. Mexico and Brazil both have opportunities. I would only start them intraday. You saw the EWZ trade already. I'd start them both intraday with hybrid frogs, and then if they're going down, I'd hold a piece overnight with markets money. Same with Brazil. Is a better swing right now than Mexico. Home Depot, solid. I like them. They had a good day today. The Russell, a candidate for shorting. I'd start it again, hybrid frog intraday, and keep a piece. The real estate did better than the S&P, if I remember. No, not quite, but it closed better. It has a better 2-day pattern, so maybe the defensive plays are coming back around. McDonald's was excellent today. McDonald's and Walmart are the two excellent ones, so just take a look at that rascal there. You'll love that. Nice, orderly open up and very strong finish, and already through the dragon. I like that. So PBW, it's doing much better than the energy sector. I'm not short. This was me getting smashed yesterday on covering that long, exiting that long at a loss, but I think it looked pretty good. SCO, this is one I'm long from here. I'm moving my stop up to here. I had a chance to get out of this, but we'll see. This is a speculation in oil. I'm trying to learn how to play it. This is Virgin Galactic. So this is that speculative tech. It did not close well. That thing is going down. I'm ready to get short that. This is Simon Property Group. This is one where I would look to get short below today's open. So if it gets, this is what I would be looking at. If it falls below that red line, then I'm going to get short because it would have rejected. It did not close especially well compared to yesterday's range. It stayed inside yesterday's range. So if it falls below the gap up move, then all the people that were buying in here will fade. And so I want to try to get short somewhere around that red line. Treasuries. How good is this swing trade exit from yesterday? Good. That's how good it was. So this is an intraday trader. Just while we're here, let's go take a look at that. Look at that intraday trade in Tesla. Treasury, excuse me. So those of you trained to futures, that ain't bad. Let's get back to the daily. Tesla, not impressive, and it closed worse than it opened, so Elon's sweating. Natural gas had a very strong move. I mean, look at this rascal in here. That's a pretty good 2-day move for an energy sector thing, so maybe that's the alternative. Oil had a little recovery, but still at the Z3 line. At any sign of weakness, that thing could collapse, and SCO will be great. The two volatility pieces, I still am believing in volatility. I moved my stop up to here, so I can't stick around too much longer in that swing. I gave back way too much. Way too much. Let's see. Wiz, still cracked. Not good. Walmart, brilliancy. We bought the Z3 excursion and then retracement, and that's done nothing but make a 5 sigma move from -3 to +2, and it closed well. That's the one. Walmart. In times of trouble, go to Walmart. Wheaton Precious Metals was a little bit better than that CEF fund from Canada. I covered, or I scratched it yesterday, but I'm going to start that one intraday. Win. I'm shorting that one right there at the red dot. I'm a little underwater right now, so my trade frame is this one. I'm going to play the top of the... I just do not have a belief in Vegas. U.S. Steel took the hit yesterday, but it had a pretty nice little pop today. So that's one I actually think I will play that one here with a stop here, and then this is where I took that loss yesterday. Had to. I just like U.S. Steel. I'm going to play that trade right there. Materials had a pretty good rebound, but U.S. Steel was better. Energy was better than materials. Finance was better than all three of them, and tech was the best by far. And then healthcare is just kind of also was actually pretty strong too. How about that? So that's a quick speed run. I'll get this stuff posted for you, and that we're about 37 minutes in. So I'll get the other one is uploading at YouTube already, so it should be up in an hour or so. Thanks for hanging in there, guys, and take very good care.